Hello students, today we are going to start new chapter of accountancy, that is Book of Original Entry, Subsidiary Books. In this chapter we are going to study what is subsidiary books and try to solve some questions. So let's start. Introduction. The subsidiary books are the books of original entry and it is also called primary records because the first entry of transaction is made in subsidiary book. So, subsidiary books are those books in which we directly record the transaction related to the book. Like sales book, we all record sales transaction, that is credit transaction in the sales book. On the basis of subsidiary book, posting are made in the concerned account afterward. What are the advantages of subsidiary book? The posting of each entry become easy. As one type of transaction is recorded in a one book, so it become convenient to locate any desired transactions. Important description about the transaction is also made the related book, so the lots of information related to the transaction is easily accessible. Disadvantages of subsidiary books. They may be expensive in case of small business, as in the small business it is best to keep journal only. Okay, so also the journal is a original book of entry, but in a big business houses only maintaining journal is not sufficient, so we maintain subsidiary books. It requires some basic knowledge of the accountancy, as if any of the entries are recorded incorrect, then it will be the problem or they need to be rectified. Types of subsidiary books. Purchase books, sales book, cash book, already you have studied. Purchase return, sales return, bills receivable and bills payable. So bill receivable and bills payable is not going to be studied, but purchase, sales, cash book and purchase and sales return book should be studied. Purchase book. This book is used for recording goods purchased on credit. Only credit transaction of purchase is recorded in this book, and also known as invoice book, bought book or purchase journal. It is not necessary to record transaction in the journal book where they are entered in the purchase book. Sales book. Sales book is used for recording the goods sold on credit. Okay, the record in the sales book is made from the outward invoice book, which contain exact copy of each invoice sent out to the customer. Purchase return. When some of the customer, here you are customer, return goods because it may be defective or not according to the expectation of the customer, it will be returned. So the book used for recording goods return for the seller is called purchase return book. It is also known as return outward book. While returning the goods, buyer prepared debit note. Okay. Sales return book. It is a book used for recording goods returned by buyer, also known as return inward book. While keeping the record in the sales return book, seller prepare credit note. Okay. So in purchase book we prepare debit note, and in sales we prepare credit note. Journal proper. Whatever amount or whatever transaction left to be entered will be entered in journal proper. So journal proper is a book of original entry, simple journal, in which miscellaneous credit transaction which do not fit any of other books are recorded. It is also called miscellaneous journal. The form and procedure of maintaining the journal is that same or simple journal. Kinds of subsidiary book is in this figure as we discussed. Now, the first question is here. Prepare a purchase book in the book of MS Messer, that is Modern Furniture House, Lucknow, UP, from following transaction. CGST, SGST is also charged. So this is the format: date, invoice, LF, detail, cost, input, CGST, SGST and total. If the goods is sell out of the state, that from out of the UP, there will be IGST also, right? So bought from the Mohanlal company 20 Godrej chairs, 2000 each, and 5 Godrej table, 6,000 each. Trade discount is also given, so we record 5 into 6,000, okay, and 20 into 2,000, that will be 40,000, and 5 into 6,000, that is 30,000, and less 20% trade discount. So trade discount will be provided on 70,000, the total amount, that is 14,000, and 56 is the amount. So you have to charge CGST and SGST on this 56,000. So cost is 56,000, input CGST is 3,360, SGST 3,360, and total amount is to be payable is 62,720. Second transaction, purchase from Bharat Bhushan Sons, Varanasi, 5 Almira 12,000, 2 revolving chairs, that is 20,000 each. So it will be also recorded as and 10% trade discount. 6 GST is charged on every transaction. It is understood, okay? So 5 Almira 12,000 each, 60,000, and revolving chairs, that will be 2 into 20, that is 40,000. Trade discount, so trade discount will be 10,000, and CGST, SGST is charged on this 90,000, that is 5,400. Recording 90,000, 5,400, 5,400, and total is this 1,80,800. Okay, right? Okay. Third transaction is 80 decks of 2,500 each. So recording is 80 into 2,500, that is 2 lakh, and 10 sofa of 20 each. So it will be recorded 2 lakh. Trade discount is 15%. Okay, it will recorded here, and CGST, SGST as charged. Entry is 3,40,000, and the total. Right? After preparing all the transaction, you have to total them and make them balance. So after making total, you can easily find that how much CGST you paid, how much SGST you paid, and how much money you spent on the purchase. So it will quite good for business organization to understand how much they pay GST, that is CGST and SGST. In next video, we will solve some more question on this. That is, it is a purchase book. We will solve on sales book, sales return book, and purchase return book.